All right, Peggy and Ed, sharpen your pencils here. I have a stat that I want to share with you. In the 2026 edition of the Canada Helps Giving Report that came out just in the last couple of weeks, Canada Helps was giving an update on how online giving is continuing to evolve. And here is the stat that they shared up front, that donations through Canada Helps, which is Canada's largest online giving platform, reached $529 million in 2025, which is up 10% or $47 million from the previous year. And they framed that further by saying this is the largest increase since the pandemic surge. So that's interesting. That's an interesting kind of lead-off number when we're talking about online giving. And I'd love to hear what your kind of knee-jerk response is when you hear that for 2025 and amidst, additional reports of declining generosity among Canadians. This seems to defy that in this aspect, giving is increasing. And actually, so let's just talk about this before we go into some of the other comments that the report makes about online giving. So, Ed, what do you think about that?
Well, I think it's interesting, and there's a couple of things that are I think this reflects, and some of the context. Now, having not read the report, but having some of the context around it would be important. What I do know is that through 2025, and in fact, all the way back to 2024, there have been ongoing postal disruptions. And one of the things that we do know about these ongoing postal disruptions, and this is the other context, is I understand that has accelerated our movement away from utilizing direct mail engagement and people giving in that way. And we've seen it as well, rises in engagement through digital activity, particularly in closed communities. And what do I mean by that? So there's the open community concept, which is connecting digitally through Facebook or Instagram, and you're just pushing content out. The closed community, people who decide, hey, please send me more information. They actually give you their email address and say, send me more. Mm-hmm. And I think that likely is where we're seeing a rise in giving. People have not, been trusting Canada Post. The fees are increasing in terms of utilizing Canada Post. I can quickly go online. And there's two things about it, and I'll talk about the negative in a second. Is me, I've always got to bring a little bit of the rain on a sunny day, right?
That's all right, Ed, go.
But the fee for giving online is not noticed to us, right? If we want to send $100 check, we have to put it into an envelope and put a stamp on it. So there's a minimal fee to us, and that's been going up. First class stamp now, I think, I don't even know because I don't use them, is over $1. Is that right for a first?
Yeah, at least.
So, but that's my fee. It's $100 donation. That's my fee. When I go online, I don't see that fee. I think it's free. Of course, it's not free. A quick calculation of $529 million given online, utilizing sort of the top end credit card fee. It's probably a little over $15 million in fees were collected in all of those transactions, but the donor doesn't see it. So it feels better to the donor. The charity sees it on that end of things. So this doesn't surprise me. I guess one last context I'd like to know is how does it fit within all of the other giving? Because, of course, we've had this kind of up and down giving information generally across the board where people are donating more and more. That's always been optimistic, even in the pessimistic side of this, right? Which is fewer donors are giving. And Lisa and Peggy, you've both heard me say, I don't believe that for a second. I think everybody gives. They're just not using their tax receipts, or they're not even asking for tax receipts. So But I do think it's absolutely 100% the way the trend is going. Everything's going digitally, and I think that Canada Helps has been a wonderful resource for our partners in the charitable world to allow that to happen. There's no doubt about it. So, I'd love to see more information, but this is a great indicator that this is the way Canadians are going with their donations.
Peggy, any thoughts on that you'd like to add?
Well, I was actually just thinking a very personal story. I have a good friend who's much older, will be in his late 80s now, and I've known him for 15 years. He always gave by check. He still does to an extent. He will actually give it to you personally to give to a charity or go there and visit them, which I think is great. Then the pandemic happened. So then it was mailing checks, obviously. But then, like Ed said, the postal strike happened. And I remember saying to him, why don't you move to Canada Helps? He does use a computer. He does. So we set up an account for him. And since then, he's done that. But he still insists on doing the big gifts with a check and going, this is local in Montreal, so he can actually go and visit their office and hand it to them because of exactly what you're saying, Ed. But I think this is the generation, of course, that's moving out.
Right.
So the next generation, they're not going to bother to do that, and they don't even want to get mail. I mean, he doesn't stop getting the mail. At half of what I do with him is just go through all the stuff that people send. It's incredible. But I think if you take him, and he's quite a major donor, and I think of the fact that he did nearly all his donations last year online through Canada Helps, I can see why that it was much easier for him, and he really did not want to miss it with the strikes. I'd also be curious. I have a question. How many donors is that? Right. So it's amount of money and then the amount of donors, and I don't know whether they. So to what Ed was saying about we're supposed to be going down, at least from a tax receipt point of view, there's supposed to be less donors, right? So how many of those are high-end donors that maybe were giving by check, like my friend, and are now doing even that big donation online?
Yeah, interesting. And of course, Canada Helps does have the full expanded report that they provide a lot more of the data-driven detail. I am definitely bringing forward kind of the key findings or the key headlines that they're putting out there to start the discussion. And anyone who's interested in diving deeper and getting some of the more detailed nitty gritty, I think we can provide the link, in our information of this episode to help people locate that for sure. So I don't know exactly how, it depends on what data you want to pull exactly, but there is a lot more on the full expanded report.
Yeah, you know what I think everyone, just again, and Lisa, you're always bringing us back to the group that's perhaps listening to us, our colleagues working for charities. I urge them all to do their own research. And I know that they are following the stats. But how are your direct mail versus telemarketing versus digital going? Are you seeing an increase in average gift digitally versus most of you are doing that? Most folks are doing that. A lot of times, though, it's being done for them by external vendors. Do it yourself. Kind of take a look, see how that's going. Keep a chart. Keep regular records of how this is going up and down. And because I think it's really a good idea simply because there are pressures on every charity. There are pressures to reduce costs. There are pressures to make sure that the return on investment remains the right level or the cost per dollar raised. And there is resistance to move away from certain things. Like the most expensive way of raising funds through telemarketing, if you're doing well there, where perhaps digital engagement of this kind would be better for you, right? And I guess what I mean by that, a lot of times charities are like, well, that's great for Canada Helps, and that's great for everybody else, but it won't work here. This is how we have to raise money. and follow your own stats, follow and test and all those sorts of things, because I do think it's a trend that we cannot deny, and this is a wonderful source of for the sector to rely on, just so that they see the increases here.
And I'd like to just direct back quickly before I move on and share another piece of the report that stood out to me is Peggy's comment, and I think it's very accurate. And again, it doesn't seem like rocket science. We're talking about the movement of generations of boomers and, Gen X coming behind and so on. Of course, this is underway, this is happening, and there's implications of this across the board in terms of who uses what channels and how that all, impacts giving. But just as I was thinking myself about checks, Peggy, like what amazes me is in how short a time it is that a check as a form of payment, whether it's a charitable donation or otherwise, has become almost redundant. My daughters, who are now 20 and almost 22, they've never had a checkbook. They don't even, when one of them got asked by their work for a check to use to set up their payroll, she was like, Mom, what? Like, what is, why would I have a check? Like, I really had to explain to her that, in as recent as when they were younger, I still was using my checkbook all the time for things. And now I'd have to really go digging to find my checks. And I just think it's such a tangible example of a change, a culture shift that has impacted philanthropy, that has impacted, it's amazing. And the shortness of that time frame, honestly. So you think of that in a 10-year, time frame. What is this going to look like in another 10 years when that generation who were used checks and as a form of payment for most of their life, or cash, what does that mean to the giving channels?
And those who wanted checks. So the only check I made in the last 5 or 10 years, maybe every year, and it was my dentist, and he's just because he wanted a check, and he's retired now. So I haven't. Now I think about it, I don't think I've made a check.
I will say this, though, that there are a lot of our charity partners out there, very sophisticated organizations raising lots and lots of money through sophisticated means, including securities gifts, who pay by check. Who, not their employees necessarily, but pay vendors. I know this, being a vendor to some of them,
right? They
still pay by check. So yes, look, I mean, the postal disruption, and I'm always, aware we shouldn't necessarily call it a strike, because it wasn't just the strike period. It was all the other disruptions that were going on. It was over 18 months, accelerated things, but it's up to our colleagues to understand that this disruption, there's no going back from it. That was something that happened. And of course, some of the things that have signaled from Canada Post since then is, the end of door-to-door mail delivery is coming. Now is the time to embrace the digital world. Now, I will say this on the digital side, which is 20 years ago, 25 years ago, when we started talking about email as a way to kind of engage, or digital to engage, particularly email, universities were always at the greatest advantage. They had, or independent schools, private schools had the greatest advantage. They had lots of email addresses, but others didn't. Now they've all caught up. They have all caught up, which is wonderful. And so there's a moment here where all the signals are in front of you. Time to move away from a certain type of engagement with your donor and move into a different type. And again, thankfully, there are folks out there like Canada Helps and various others who are providing us regular updates around how this is going, and food for thought for the whole sector about what we ought to be doing about this.
100%. And I know we could end there, but I have one more thing I'd just like to share with the two of you and just see what you think of this, because Ed, you mentioned securities, and Peggy, you mentioned numbers of donors. So here's another fact they shared that ties in both of those factors. So under kind of the headline of the power of the few comes gifts of securities. And here's what was something that they noted, that in the Canada Helps kind of giving bucket, less than 0.5% of all donors, so less than 0.5% of all donors contributed more than $83 million in security gifts.
Mm-hmm.
That accounted for 16% of the total giving on Canada Helps.
Okay.
Mm-hmm. Mm-hmm.
So, and they identify this as being one of the most significant shifts in online fundraising.
Mm-hmm.
And they go on to talk a little bit about that. But I find that interesting.
Yeah.
And as you were doing a very tidy wrap up that I just ignored and kept going with, you know, what does that say, you know, to our charity partners who aren't maybe perhaps part of the Canada Helps platform because they have their own in-house things, but what does that say about a shift or attention being given to this previously considered more like really alternate way of giving? I mean, it's a very small percentage, but it's a very large piece of the pie potentially. So is this something that you're seeing, Ed? Like, is this, you know, were you prescient? Did you know that I was going to come at you with this?
Well, there's a couple of things. So let's go back in history here. So in 1986, I joined a small army of university students who worked down on Bay Street, who were couriers delivering stock certificates. And they were actual paper certificates, and they were given to a courier who walked from one building in downtown Toronto to another building in downtown Toronto with those stock certificates. Now, I went there, a long story, but I went there to get that job. I ended up not getting that job, getting a job on the options desk. Okay. I was an history, political science, and English major. And for some reason, within 2 or 3 weeks, I was involved in options trades on the US market.
Okay.
It does kind of tell you a little bit about the financial system, because that can still happen today. But the point is not why I went down. I went down to follow these, and it was like there were cages, and these cages held these certificates. My God, it was like, I don't know. It was like working on the railroad or something. It was very archaic. At the time, it seemed very sophisticated, but now we think, oh my God, how did that happen? Fast forward to today, all of those transactions are done instantaneously, and they're done digitally. And I think, again, there's been a lag time. And I want to take us back to 10 years after I was going to say 1886. That's all.
1886. Good Lord.
1996, when the Paul Martin government Paul Martin as finance minister brought in this notion of gifting highly appreciated securities in Canada and being able to offset the capital gains tax and also receiving a tax receipt for the full value. Major gift people and charities generally wanted nothing to do with it. And this was handed over to planned giving professionals at the time, because we were the asset people. We knew all about this. We got taxes. We don't, the major gift folks were like, I don't know anything about this. Keep it away from me. Again, fast forward 30 years later, here we are. Those make up the bulk and have made up the bulk of major gifts from individuals, highly appreciated securities coming over. So what's that all mean, I suppose? A while ago is the idea of using that sort of tool for an annual fund donation and also making our regular contributions is commonplace now. And digital is commonplace, just like you were talking about. So this makes perfect sense to me that more and more organizations, or individuals giving to organizations are doing this. And what Canada Helps' main focus and main job has always been is to provide a technical platform for smaller charities to receive gifts, online and securities gifts. So again, kudos to Canada Helps. They're, by virtue of providing this tool, people are able to articulate this. And a lot of charities are still lagging behind. They don't really have securities gifts on their line of sight. They don't think that. And thankfully, Canada Helps is pushing this into the new era. So for me, this is a natural extension of everything that charities ought to be doing. And it does show how strapped a lot of us are, or a lot of charities are, because they're not paying attention to it. Canada Helps allows them to. So this is a wonderful signal that, because I would imagine smaller charities are benefiting from these donations. Of course, almost every large, this would be an interesting thing. Let's kick all the large charities off of Canada. Helps, right? If you're 5 million plus,
I'm not sure they're using it. I think, because I know just from having a very small client in Montreal, and they don't have an investment broker. And if they did, they'd have to pay those people. So they don't want to do that. And when Canada Helps started doing that, that was a game changer for them, because they had donors asking them to do it, and they weren't going to get the gift otherwise, because they had savvy donors who knew that they had appreciated shares, but they couldn't give the money. So the fact that that option is now there through Canada Helps is a huge thing. And so I'm hoping and thinking that it is the small charities, because they couldn't do it otherwise.
Yeah, I agree. I agree with you. And you know, everything you just said is spot on, right? And I do think, and we talked about this actually, Peggy, a while ago when we were talking about credit card charges, and when you were on for an episode, and you said most large charities, or most charities with large donors, say don't do it that way. Send us a check. And most of the larger charities are engaged directly with donors when they're deciding to make this. So let's hope it's moving forward in this way. Again, there is a hidden fee to those small charities that they do not see, or the donor thinks it's not there. And I think the charities are turning a blind eye to it. There will be a fee.
There are fees on Canada Helps, for sure.
There are fees.
But at least you know it's a charity that's benefiting from those fees, and not a private investment firm.
And Canada Helps invites the donor to offset the fee as well if they want to in their donation. So there's a few ways to navigate around that. So interesting. And I like that idea of signals. You know, when we hear these reports, when we get these, you know, studies, we can look at them as signals. We don't have to take them just at face value. We can discuss them. We can look at circumstances that lead to that, and we can look at learning points within them. So thank you for this discussion, and it'll be interesting. Digital will continue to be an interesting space in its impact in philanthropy. So we're going to take a break, and we'll be right back after this. This is Let's Get Real, Canadian Perspectives on Fundraising, a podcast brought to you by Ed Sluga, PG Growth. I'm Lisa McDonald and of Hillborn Charity eNews, and our guest joining us today is Peggy Killeen, part of the team with the PG Growth gang. Ed, you are wanting to talk about advisor fees.
Yeah, and so I think it's really an interesting moment to talk a little bit about advisor fees. I had the opportunity recently to speak in front of a Humber College class taking international development, and a lot of professional postgrad professional courses in working within certain types of organizations, international development in this particular case, but social work and various other groups, there's always a little bit of a, you might have to deal with fundraising moment. And so I was brought in to talk a little bit about fundraising, a little bit about plan giving. And I was asked specifically to talk a bit about advisors and how do advisors work within the plan giving world, and why should we know about advisors? And that prompted me to think about our partners, the advisor partners, and talk a little bit about how we work alongside of them. And for plan giving, of course, there are some obvious ones. And the most obvious one is a lawyer who helps a donor who is their client create a gift in their will to a charity or multiple charities. And that sort of is the standard one. But there are lots of other advisors doing lots of other things, which reminded me of some comments I had read about from an investment advisor, but also a thought leader in the investment advising world, Jeremy Schneider, around this. And we've known for years that there are different ways for advisors to get paid. And one way, of course, is to charge you for products that you buy from them. And what Jeremy Schneider talks about is this really interesting thing where the person giving you advice is also charging you for the things that you buy from them. So it feels self-serving. It might also almost feel like a conflict of interest. Now, no advisor would stay in business very long if they just kept on selling you things you didn't need. But that's the industry position on it. Don't know if that's necessarily true, but there you go. Another way is being remunerated from assets under investment. So if a big pool of capital is under investment by this individual advisor or the group that they work with, they take fees from that big group of funds. The bigger the group of funds is, or the pool of funds, the bigger the fees are.
And in this case, Ed, you're talking about financial advisors as opposed to lawyers that were in your first example.
Yes, yeah. Correct. Yeah, sorry if I hadn't been clear about that. I'm talking about financial advisors. Of course, there's a final way that they get charged, financial advisors, is by just charging you a flat fee for advice, a flat fee to meet with them, or a flat fee to be their client. They'll charge you X per year in that way. And it made me think about some of the ways that charities partner with advisors of this kind. And of course, these advisors are reaching out to us all the time. And we know lots of them. I have great respect for many of them. For some of them, I'm wondering about what's going on. And so here are two ways that they often reach out to us. One is they provide a service where they'll give you, or come into your organization and do an estate planning or financial planning seminar or webinar. And there's a reason why they keep coming and talking to your charity about this. It's because they are trying to engage, yes, with your donors, and then hopefully they will become their clients. And just remember that. I'm going to talk a little bit more about that in a second. The other area, of course, is donor advised funds. And most of the people who are working in both of those areas are getting paid in one or the other of the two ways that Jeremy Schneider says you should try and avoid. Either they are charging for transactions, or they are getting fees from an accumulated pool of assets. Sometimes they're getting paid in both ways. And so it's important for us as charities, when we're thinking about financial planners, financial advisors, and that group, that we do our due diligence. We find good people who understand what their role ought to be. And we also partner with them in a really incredibly transparent way in telling them what we expect from them and actually getting from them commitments about what we expect that we'll give to them and that they'll get back from us. And I think that this is not done to the greatest degree that we can in charities. We often just default to the financial planner that is either most persistent or and this is an unfortunate situation, that might be on their board of directors. And that is in a tremendous conflict of interest. And I won't go too deeply into that, but just remember that financial advisors, they want to get paid for the work that they're doing, and they should get paid for the work that they're doing. There's no doubt about it. But it does lead to circumstances that we've talked about before. Most recently, an exchange I had, and I mentioned this before, with Malcolm Burrows through LinkedIn. Malcolm Burrows, head of and founder of the Aqueduct Foundation, talking about how donor-advised funds held within private foundations, particularly from some of the bank-run private giving foundations, do not have any regulation on them. They do not have to give dollars away. A lot of them are taking great pains to make sure dollars are given away. But what was missed in the fine print of Malcolm's statement was a lot of those private giving foundations find it administratively difficult to actually disperse gifts. So they don't. And for me, it's like, hold on for a minute. What are you doing here? Well, assets under management. That's what, the more assets under the management, the bigger our fees. So they might default to a moment of feeling it's complex and complicated and not worth their time. So it's just when we're working as charities, and just one final note around that, are seeing greater gifts from donor advised funds, and they're working harder to engage with them. And I do think there are good actors out there in the marketplace who are doing their best to be engaged with those charities. But just remember how they're all paid, and make sure that we're aligning with the folks that make the most amount of sense for our charity. We did in the previous segment talk a little bit about Canada Helps and their approach to giving, and the comfort that we can all take from the fact that they're a charity themselves, and they're governed as a charity, and they're to support the charitable sector. So just remember that there are alternatives out in the marketplace that we can trust as a charity. Be proactive in engaging, understanding the way financial planners are, and those associated with them are remunerated. Make sure that we've got the best people on our side, not the newest people, not the loudest people, not the most persistent people, but the best people for our charity. No matter how those financial planners are connected with us, and I can go all day into the conflict of interest I've seen out there over the course of the years, we need to do what's right for our donors and what is ethically and morally the best position as well. So again, I think that fundraising is becoming more complex around this. And I think it's more, and fundraisers have to be better situated to deal with these ever-growing, complex, and overlaying issues. That's my.
I have some thoughts. I feel like you've just delivered a bit of a public service announcement, Ed, just as a reminder, of doing our due diligence and making sure we're understanding all the fine print, as you say. But before I kind of jump in with what I'd like to comment, I'm wondering, just Peggy, what your experience has been. You're on the boots on the ground, working with a lot of small charities and others, and managing relationships, liaising, with advisors. What's your experience been, or what do you think about Ed's comments in this, context?
Well, I think there's a couple of things. One is my direct experience when I was working at a charity, and that I'll now use when I'm talking to people who work in charities as a cautionary tale, is that, often these kinds of advisors, whether they be legal or financial, are the ones on your board. They're often recruited onto boards, as Ed said, but they're also the ones who want a plan giving committee, right? And we won't even go into plan giving committees. Mm-hmm. I'm not crazy about plan giving committees, but one of the things is to be able to sort of stop people in their tracks is to say, that's great. you know that as an advisor, you won't be able to work with any of our donors because that is a conflict of interest. So making that clear right from the beginning and having it as part of the understanding of your board member's role, and having your executive director understand that they have to say that, it has to be said, so that you don't offend somebody later when you tell them. So say it up front, and suddenly there's not so much interest in that kind of work. But for sure, that's one of the things. And then gift acceptance policies, which, as Ed knows, we're very interested in people having very thorough gift acceptance policies, especially around legacy gifts, because of the complexity sometimes of them. But in those policies, we can also put things about fees, finder's fees. There's all sorts of issues around commission and fees, but we could also be more diligent about what we put in our gift acceptance policies and how we work with our donors and what we advise our donors. The third thing would be that, Ed, you were talking about the DAFs, and that the CAGP Foundation did put out a report on DAFs, but one of the things that they do recommend, and again, all we can do is recommend, but the more that we advocate for this, the better, is that that I'm going to just read a bit, is to be transparent. So this is the two-pager that's actually directed at professional advisors, financial advisors. Disclose benefit fees or other forms of compensation to donors. So asking that you disclose everything, that you avoid commission-based structures that could influence your advice, and you address potential conflicts of interest and provide clarity, especially when acting as the investment manager of the DAF for the DAF Foundation while managing a client's assets. So an acknowledgement that is happening, but we want to try, maybe later on we have the ethical, AFP has ethical guidelines, CAGP has ethical guidelines. Maybe we want to develop further and do more of those
if I can jump into that, and I totally understand and agree with those ethical guidelines and that transparency. But I will be clear, and I think obvious here, that the charity has nothing to do with what's going on here, because it's the charities. If someone were to come to me and I was working at a charity and they said, I'd love to start a DAF for the charity, which advisor would you suggest? I would say, why don't you just Howard's here? Why would you do that? Now, of course, some of the DAFs are as low as $10,000, which endowment, we have standard charities. Endowments tend to be $100,000 plus because the administrative fees. And by the way, that's the onerous part of some DAFs not dispersing out, because the administrative reporting fees are expensive. And for a $10,000 DAF, it's not quote unquote worth it to the DAF holder. So that transparency that you're talking about, Peggy, is absolutely important. But I have to say, we have to assume that charity has nothing to do with that conversation. That's a financial planner speaking to their client, and the donor, if it's the charity, if it's brought up in the conversation at all, it would be, driven by the donor. I'd like it all to go to XYZ charity. So what hopefully lots of our financial planning and financial advising friends and colleagues are taking that on, and they probably are taking it on.
Well, that's the hope. I mean, I think it's advocacy amongst those people. And we've always said the people we normally work with as, gift planners are hopefully the kind of people who will do the right thing.
Yes, they are. I agree. They're probably the kind of all the kind of.
But that's why we need to keep advocating. We need to do this. And we need to do the same with charities and have our charity people understand that you can't bring a person, your board, your leadership, that you can't bring board members on who are financial advisors and then use them.
That's why I'm trying to talk about the things we can control. We can't control that conversation that happens between the financial advisor, no matter how they're remunerated, and their client. We have nothing to do with that, nor should we. That's a no-go. But what I'm talking about is just make sure that if we're partnering, if we're connecting, if we're allowing into our private data, frankly, and our relationships with our donors, that we're doing it with the right folks who are remunerated in the way that we believe will be best for our group. And that's something that's really important. Look, I won't get into the fact that this conflict of interest, as you say, Peggy, rightly, almost every board has at least one, if not many, professionals who are not in direct conflict of interest, but are representing organizations that could, that have their own charitable number, essentially. And if we would said, we're the hospital foundation, so I want the executive director or a fundraiser from another hospital foundation to be on our board, we would say, no, they can't be. They're in conflict of interest. Now, why are they in conflict of interest? Because they have their own charitable number and they want those donors there. That's true of anyone that is connected to a place that's got its own charitable number. That's an interesting moment, and one that we're not going to tackle today, nor will we tackle it anytime soon, for lots of different reasons. But it's what can we control? Make sure we control it, and I can talk about organizations I've been in where the opposite is in fact the reality, that the professionals have lost control and it's in the hands instead of professional advisors, instead of the professional managers and fundraisers of the organization.
Well, this is what I was in my little comment or bird's eye comment on this discussion was going to be, is that I find it a very interesting kind of continuum of communication, collaboration, and partnership that has happened, again, even over the last 10 years between philanthropy, charitable organizations, and professional advisors. 10 years ago, a lot of the communication, I was working with organizations who were trying to educate professional advisors about philanthropy and how to get engaged. There was some recognition that there was, benefit to this type of marriage or partnership between the two, because there was a common aim in terms of clients and fulfilling their, philanthropic dreams and their legacy and all of that seemed like a natural fit between the two. So 10 years ago, 7 years ago, those were some of the tone and tenure of conversations, how the two fit together. Well, now here we are. And particularly in, the world that you, Ed, and Peggy are working in, the collaboration is there, the marriage is there, the partnerships are there. And now we're trying to establish, the ground rules and make sure that everyone is playing, ethically in the sandbox and all of that. So, we aspire as a sector to form more valuable partnerships, to lean on collaborations towards the bigger good, to leverage, the kind of knowledge and audiences for the good of the clients, the donors, and philanthropy in general. But it's not without its challenges, is it? And that's, Ed, where you kind of had brought the point to, because there is a matter of trust, as always, that exists in philanthropy, and there is trust around the table that people are coming and doing their part to maintain the ethical considerations of what is happening. And trust becomes more tenuous when there's money involved, and that is just a fact.
Yeah, and I think the other part of this, and getting back to Jeremy's point about this, right, which is, and look him up, he's a really interesting guy. He's got a firm that actually connects fee-based advisors, not transaction-based, but fee-based advisors with clients, called Nectarine. And the point is about trust, and the point is about understanding. And there are more and more organizations on the financial side seeing the opportunity when it comes to donor advised funds and rushing into the space. And it is going to be more and more prevalent. And they are going to be coming to more and more charities and offering their service to speak to their donors so that they can turn them into their clients. And we need to be not, I will pull back and say a lot of times, a lot of these financial professionals can seem extraordinarily sophisticated, super smart, very flashy, and they present to a lot of our charity colleagues as someone who is uniquely qualified, very sophisticated, understands the financial sector, and perhaps out of our league a little bit, right? And this is what you and I, Peggy, talked about with some of the presentations we talked about, being at the table. A lot of other advisors, if we're a charitable advisor to the individual, a lot of the other advisors don't want us at the table, right? And partly it's because they don't feel that we have the qualifications to be there. Of course we do have the qualifications. Not everybody does, just like a lot of those advisors don't have the qualifications to be there. And we kind of defer to them on occasion. We can't do that. And we have to present ourselves as full partners and equal partners and in control of the relationship with our donors, right? There are lots of ways for them to get to our donors. They can go to our annual report and look at all of our major donors if we've listed them there and just give them all a call. We don't have to offer introductions to them unless it's right. But there are more and more charities feeling this pinch. And I think there's more and more charity reality out there, which is it's something we have to go along with. And by the way, we can bring these folks into our sphere on our terms. And for me, that's the most important part of the learning from Jeremy Schneider, his thoughts around all of this. And by the way, find fee-based advisors, ones who will charge their clients a flat fee for advice, and then bring them in, and it solves the problem. Not that there will be a problem. It solves any potential problem by saying no one's trying to sell you anything. People are trying to help you with your own vision for the future. Getting right back to something we talked about earlier, which is about legacy. How do we help them with that?
And on that note, I think we will call it a day. Thank you, Peggy Killeen. Thank you, Ed Sluga. It's always a pleasure to have these discussions. We are getting real on a bunch of topics that have to do with philanthropy in Canada and working at charities in Canada. And it's always interesting to unpack some of these ideas and some of these topics and get the feedback on how this impacts those who are working in it, those who are donating to it, and those who aspire perhaps to get more involved and see where they can make a difference.
Thank you, Lisa. Thanks, Peggy.
Thank you so much. Thank you.